we're at the end of the currency's life cycle. There is no doubt about it. We have to shift into a new system, and the system really died in 2008, and that's what they've been working on since then. And I think that we need to take our power back. So that's why I am a huge sound money advocate, which is physical gold and physical silver. Because what this does is it prevents their ability to inflate it away.
The US dollar has long been the dominant global reserve currency, though its share has fluctuated. It stood at approximately 65% in 1999, declined to around 55% in the mid-2010s, and rebounded to nearly 60% by Q1 2024. However, according to financial analyst and economist Lynette Zang, the dollar is at the end of its life cycle, with only 3 cents of purchasing power remaining from its original value. She warns that fiat currencies are inherently designed to lose purchasing power over time, making them unreliable as a long-term store of value. The economic turbulence caused by the pandemic and the war in Ukraine has intensified concerns over the US dollar's future as the world's leading reserve currency. For decades, its dominance has been built on 2 key pillars: America's deep capital markets and global security alliances. Today, both are under pressure. A shifting U.S. foreign policy, rising geopolitical uncertainty, and an overstretched stock market are prompting investors and policymakers to reassess their reliance on the greenback. Zang argues that governments introduced the fiat money system to impose hidden taxation through inflation, a process they have perfected over time. She stresses the importance of individuals reclaiming their financial sovereignty and strongly advocates for sound money in physical gold and silver. In her view, these tangible assets safeguard against inflation, with gold's most crucial role being the preservation of purchasing power over time. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
So first of all, no, there's nothing that anybody can do to stop this trend, because the way that the system is developed currently, these are created from debt. And I'm sure everybody has heard how much unpayable debt there is out there. And it does look like that wall is cracking in a rather pervasive way, especially on the corporate sector, because the corporate sector can't go in and just print more dollars like the government sectors can. So yeah, we're at the end. Can we mitigate it? 100% we can mitigate it. This is not all doom and gloom, but this is a natural progression. And I think that we need to take our power back. So that's why I am a huge sound money advocate, which is physical gold and physical silver. Because what this does is it prevents their ability to inflate it away. The single most important function of gold is to hold its purchasing power value over time. Additionally, and this should be taught in grade school, but it's not. When they sold us the money system, right, they needed the economy to have the ability to specialize. So you have a banker, you have a farmer, etc. So money was supposed to have 4 key functions: a tool of measure, a tool of barter, a long-term store of value to ensure that whenever you use that money, but the problem for governments was that if they taxed you on that system, you knew about it and you might not agree. So they came up with this fiat money system, this stuff, right? And they know how to make the transitions. They've done it so many times. They totally know how to do this. So they came up with this system, and who doesn't know that if you just sit and hold this dollar over time, it will lose more purchasing power and you will be able to buy less and less and less with it. I think everybody realizes that today. So that means that one of those key functions is gone, right? Long-term store of value. Where they want to shift us into digital assets, actually, if you read the work of the central banks and the International Monetary Fund, which all the central banks are part of, they remove the second function, which is a short-term store of value. So that when you get paid, if your money is automatically deposited into your bank, because that's what would happen if it's all digital, right? They would be charging negative rates in there. Yep, I'm going to go on the record to say we will be seeing negative rates. There's not one little doubt in my mind about that. But when you make that deposit, immediately those negative rates will erode the principal, because once they have all the purchasing power, they have to attack the principal. They can't inflate away any more of the purchasing power.
Global government debt is projected to reach a staggering $97.1 trillion in 2024, marking a 40% increase since 2019. Among the most indebted nations, the United States leads with a debt-to-GDP ratio of 123.3%, significantly higher than the global average of 90%. Lynette Zang warns that the financial system collapsed in 2008, prompting central banks to navigate toward a new monetary framework. One alternative reserve asset gaining traction is gold. Central banks have recently ramped up their gold purchases to hedge against growing monetary uncertainty. The World Gold Council estimates that central banks added approximately 1,000 tons of gold reserves in 2024 alone. This strong demand is reflected in gold's soaring price, which reached $2,920 per ounce as of March 7th, an increase of nearly 80% since November 2022. According to the Bank for International Settlements, the central bank of central banks, gold is the only financial asset with zero counterparty risk. Zang emphasizes gold's unmatched significance in the financial system. As economic uncertainty intensifies, she maintains that gold and silver are crucial hedges against inflation and financial turmoil. Gold forces fiscal responsibility, she asserts, reaffirming her belief that physical precious metals are the ultimate protection for preserving purchasing power. Let's shift our focus to a video.
So when I look at the state of the economy, it was already extraordinarily fragile going into this episode, and markets like certainty. They like certainty. There is no certainty out there. And so, look, in 2008, when the system died, because of all the studies that I had done on currencies and currency life cycles, I 100% knew that food became the single biggest issue for people during these transitions. Because let's face it, when one currency goes away, another one is going to pop up. Obviously, it should be obvious anyway to everybody, they want to push us into a purely digital surveillance currency. I don't think that's a very good thing. I want to see a currency that has a component of gold and silver in it, but especially gold, and that gold must be convertible. In other words, if I don't like what my government or my central bank is doing, like we used to be able to, I could walk in the bank with one of these and walk out with this and pull the gold out of the system. Because what gold does is it forces fiscal responsibility, right?
Yeah.
There is no, once we went to a pure debt-based system in 1971, there is no fiscal responsibility. It's tax and spend and spend and spend and spend and tax some more and, plus the inflation tax. Absolutely, because it is the only flight to safety trade that there is. The governments would also like you to think that government bonds are a flight to safety because, hey, they can just print the money they need to repay you. But the reality is gold. And this is according to the Bank for International Settlements, which, as you know, is the central banker's central bank. Gold is the only financial asset that runs zero counterparty risk. It's got thousands and thousands of years of experience going through what we are going through, what we have been going through, and what we're about to go through. So gold, that's why it's, here's the thing. Where's this stuff used? One place. Here's my Bitcoin, right? Which isn't really Bitcoin, but it is gold, right? It is gold color anyway. It's not real gold.
No, not real gold. Yeah.
No, they want you to think that this is digital gold, but it's really not. When you're looking at gold, where's this used? But you have this, and where is this used? In every single sector of the global economy. Therefore, of everything, all financial assets, all assets, period. This is the only financial asset that is used in every single sector of the global economy. So therefore, it has the broadest base of functionality and the broadest base of demand. Now we see the level of energy that it takes to create these cryptocurrencies and all these data centers that are going in, et cetera, et cetera. These cryptocurrencies use the energy. They don't store the energy. It takes gold. It takes energy to mine gold and silver.
The price of gold has surged tenfold this century, with nations in the global south leading a wave of massive purchases, an unmistakable signal of the dollar's waning dominance. By mid-February, the global gold market was on edge. Prices had been hovering near record highs at $2,800 per ounce, sparking intense speculation. Would gold plummet, or was it finally poised to break the symbolic $3,000 barrier? For both investors and savers, the outcome hinged on familiar factors. Had geopolitical tensions escalated following Donald Trump's return to the White House, a worsening global outlook would likely be bullish for gold. Meanwhile, a strengthening U.S. dollar or hints of a Federal Reserve interest rate hike from Jerome Powell would introduce bearish pressure. As always, the interplay of these forces would determine whether gold's rally continued or faced a sharp correction. What is your stance? Please drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.